Pending sales and demand are up in every single county in the Bay Area. How is this even possible with the unemployment rates as high as they are today? Coming up on the Silicon Valley Snapshot. This is Danny Gould with the Selling Silicon Valley Group. Welcome everyone to another Silicon Valley Market Snapshot for the fourth week here of July in 2020. All the way through July, everyone. It just seems like the market keeps humming along and humming along and humming along. And before we get into the data, if you are a home buyer in today's market and you're looking for a comprehensive data set in the zip code or the neighborhood that you're looking in, go ahead and text buy data to the number down below, and we will get you a comprehensive market report for the specific area, zip code, or neighborhood that you're looking in. And if you're a home seller in today's market and you're wondering, is now the right time? What's the right pricing strategy? Go ahead and text the word sell data to the number down below, and we will get you a very robust, comprehensive data set to help you make the most educated decision possible as a home seller, because right now, pricing strategies are the single most important aspect of the listing process. Not in addition to the marketing, but the marketing and the pricing strategy go hand in hand. Because if you have a really great marketing strategy and a terrible pricing strategy, you could end up with tens of thousands, if not hundreds of $1,000s lower in your final sales price. So everyone, let's get into the data, especially right now, everyone. We're talking hundreds of thousands of dollars. We're not just talking tens of thousands of dollars. This is the market where you can leverage your asset and make hundreds and hundreds of hundreds of thousands of dollars more than you could have before, literally. All right, everyone, let's get into the data right now. Very quickly, just a brief run through. If you've been watching these videos for any period of time, you'll be very familiar with these graphs. So I'm going to go through it pretty quickly. I hope that you guys can keep up. If you can't, go ahead and ask the questions down below, and we'll get out. We'll reach out to you. So if you're looking at this graph right here, it's the Santa Clara County statistics for month to date. Sales versus pendings or homes sold, inventory versus pendings. And what you'll notice is that pendings are up again year over year, 16%, and month to date, meaning that up to the 28th of July, we're now at 16% increase year over year versus a 27% decrease, 26.8% decrease to be exact, in inventory. So we continue to see this narrative where there are less homes for sale and more demand. There is more demand. And as we move into San Mateo County, we'll see that the demand aspect is still there, an increase in demand year over year. The difference being that in San Mateo County, we're seeing an increase, almost a 25% increase, a 23% increase in inventory, which is definitely, if you're a home seller in San Mateo, should definitely be a warning of things to come, because we had very little inventory for a few months there in the springtime. And I believe that we are going to continue to see this type of surplus for the next couple of months here heading into election season. Nothing is going to change. Whatever the market is right now, very few things will change in your specific marketplace between now and election season. There's just not much is gonna happen between now and then. Unless, never say never, right? I should have said that. I knock on wood. Let's hope that nothing drastic or dramatic happens between now and then. But 2020 has been an interesting year, right, folks? But if nothing drastic happens, if no extraneous forces cause our market to shift, nothing in the market itself is going to cause the market to shift. Flipping over to San Benito County, we'll see that the inventory levels have increased 13% year over year. Last month, the inventory levels were definitely down year over year, and the pending sales were way up. It's astronomical how high they were. We had an overall increase of 17.8% in pending sales month to date here in July versus a 13.6% increase in home sales, or in an active inventory rather, which means that things are pretty neutral right now in San Benito County, meaning that they feel relatively similar to what it did. The market should feel relatively similar to home buyers and sellers as it did at this exact same time last year. The equilibrium is neutral, right? Or the equilibrium literally means neutral. What I mean is that there is equilibrium in the system, right? It's a neutral type of market. No shifting there, no drastic shifting. Moving over to Alameda County, though, we'll notice very similar numbers to Santa Clara County. Decrease of 26% in inventory month to date year over year versus a 22% increase in pending sales month to date year over year, meaning way more demand, way less supply. Nearly a 50-point spread, right, in both Alameda County and Santa Clara County, meaning that right now, if you're a home seller in Alameda or Santa Clara County, you are in the driver's seat. You have all the leverage, you have all the control. And if you are a home seller in San Mateo County or San Benito County, you definitely have, in San Benito County, you have relatively the same amount of control as you did this time last year. In San Mateo County, you have a little bit less control. The buyers have a little bit more leverage. Now, do they really have that much leverage? Not really, right? Now, the one thing that is consistent between all four counties here is not the inventory levels, but the demand. And this is something that I've been talking about for many, many weeks, if not months now, but that the demand stays fairly consistent, right? Demand has remained fairly consistent. What fluctuates is inventory levels, right, folks? And so what's fascinating is that not only is that narrative playing out week over week in the counties, but it's also playing itself out as in Bay Area wide, the demand staying relatively consistent with across counties as well, not just within the county, but across the counties as well, which is interesting. It's an interesting thought, especially had you looked at the unemployment rates at the beginning of April. You would have been hard pressed to come to a positive conclusion for demand here in Silicon Valley. What I'm going to offer you right now is a couple of data sets to maybe elaborate further why we're in this position, or why the Silicon Valley marketplace and nationally even we're not in nearly as bad of a place as we would have expected, right? First slide I'm going to show up here is a complete look at the unemployment numbers from the beginning of shelter in place up until July 11th. And what you'll notice is that the cumulative new filings for unemployment, obviously it's gone up every single week. However, when we look, the apex of individuals currently collecting unemployment, we tapped out at about May 9th. Now, if you recall, the market didn't really start picking back up until after mid-May. We're talking Memorial Day weekend into the beginning of June. That's when the marketplace really started to kick into gear. Funny enough, unemployment has gone down. People collecting unemployment nationally has gone down a week after week after week ever since that time. Coincidence? Maybe. But I don't know. I don't know if that's if that's a huge coincidence. Let's also look at purchase applications. This is year over year difference in purchase applications. Now, if you're sitting at home and you're like, Danny, what does that mean? Great question. Purchase applications mean you have submitted your application to purchase a home, right? It doesn't mean that you are in contract. It means that you have applied for a loan. At the beginning of the year, we had this really strong start on the purchase application side of things. And as you can see, at the beginning of March, that momentum was still riding strong, right? We were up 10% year over year. Obviously, shelter in place happened, boom. Shock to the system. We were down as much as 30% in the middle of April for purchase applications. Now, since the middle of May 20th to be exact, we have had 10 straight weeks of year-over-year increases in purchase applications. The apex being on July 8th, right? Guys, this is not this is high-level stuff here, right? This is not what you're going to see. I guarantee you, you're not seeing this on the news, right? You're not seeing this on CNN, Fox News, whatever news channel you subscribe to, right? They're not telling you this stuff, right? Their job is to instill fear in the marketplace. It's their job to make you afraid to go outside and to buy a home or to sell your home. This doesn't lie, right? This doesn't lie. Clearly, the narrative that the media is trying to paint and reality are two very different things. Now, I'm not trying to discredit the validity of coronavirus. I actually have family members right now who are battling with it. Prayers go out to them. I'm not trying to discredit that, right? What I'm trying to discredit is the narrative that the whole world is crumbling as a result, right? People can still live their lives and still go out there and purchase property. Clearly. Now, all that aside, unemployment numbers, purchase applications, that is some really tangible data that gives us an insight as to why we're in the position that we're in, right? This is national data, right? Obviously. Silicon Valley is even stronger in the sense that a lot of the sectors that were negatively impacted by unemployment, right? That were negatively impacted by COVID to begin with, those sectors, some of them don't even exist here. And if they do, they're not the people who are buying homes in Silicon Valley. The activation energy is simply too high here for a lot of those individuals to buy properties. It's just the way things work, right? Not saying whether that's right or wrong. It's just facts, right? Now, when we look at unemployment rates and home sales, this is a very interesting graph produced by Keeping Current Matters, one of the top real estate trend and data curators, okay? They have this very interesting graph that they've made for us, showing the relationship between unemployment rate, J-Rod, throw it up there, and existing home sales. Look at this graph. Very fascinating because what they've determined, right, if you're looking at this graph, there is no direct relationship between unemployment rates and home sales, right? So in the history of the U.S., well, at least going back the last 30 years or so, 20 years. Can't do math, clearly. In the last 20 years, I'm getting heated about this stuff. In the last 30 years, what am I talking about? My goodness, I'm having a rough morning this morning. In the last 30 years, you look at this graph and if you look at the very first peak in unemployment there, it's 7.5%. Home sales rose that year, right? So unemployment rose, home sales rose. Then we have this little valley, number 2, right, in 2000. Well, that didn't really impact home sales at all, right? The home sales went down nominally. The decrease in, I'm even getting confused myself reading this graph because it's so confusing, but at the same time, it's confusing because usually you see like direct correlation, right? That's not the case here. The unemployment rates went down to a minima, and that same year, home sales decreased. That's number 2, right? Point 2. Then we go back up, look all the way to 9.6, right? That's when we had the housing crisis, right? Obviously, home sales diminished that year. But at maximas and minimas, we're seeing home sales decrease, right? And everywhere in between, there's just kind of all these fluctuations and ebbs and flows. So what we can determine here is exactly what I've been trying to relay to everyone in these videos for the last couple of weeks, is that the unemployment rates nationally have nothing to do with the strength of the market, especially nationally. Clearly, the data shows, and locally, I believe that to be the case, or I believe that to be even more of the case, right? This is what we know now. In 5-10 years or 5-10 months, whatever the case may be, there might be new data to show that in that local period or in that In that time frame, there was a relationship. But right now, what we're seeing nationally over the last 30 years, there's been no relationship. So anyone that's trying to paint the picture, or any entity that is trying to paint the picture that unemployment is somehow going to cause the market to dip, they are wrong. Plain and simple. And the data proves it. So, are we having fun yet, everyone? I hope you are. And look, I'm seeing it right now. I'm seeing it in the marketplace right now as we're kind of like heading into what is sure to be a very interesting fall market in the end of the summer market in August. The buyers in the area are finally starting to realize that this market is not slowing down anytime soon. There were many people who got into the market at the beginning of COVID because they believed that this was going to be their opportunity. Opportunity is still out there. You just have to know it when you see it. The opportunity is in the interest rates. You're never going to get money for a cheaper price than you get it today. If you're a home seller, the opportunity is in capitalizing on the lack of competition that you currently face. At some point, both of those narratives are going to change. At some point, there will be more inventory. At some point, interest rates will climb, right? And between now and then, who knows what is going to happen, right? Or before those narratives shift. But don't be the buyer that I've been talking to for the last 5 years. That is, 5 years ago, 6 years ago when I got into real estate. Same guy. I'm waiting for the market to drop, waiting for the market to drop, waiting for the market to drop. I was showing him homes in the 700,000 range. Those same homes right now are worth $1 to $1.2 million. Market's never going to drop that hard. From 1.2 to 700, never in the history of the United States has that happened. And I don't expect it to now. So don't be that guy. Don't be that gal. If you're a buyer, if you're a seller, do I need to say any more? The data speaks for itself. Get off your high horse, get your butt in gear, and let's start the process, because you never know when things could change. Once again, everyone, if you are a home buyer in today's market and you are looking for comprehensive data very similar to what we're seeing here, go ahead and text buy data to the number down below. And if you're a home seller in today's market and you're looking for a comprehensive data set much more robust than what you're seeing right now, go ahead and text sell data to the number down below, and we will get back to you with literally the most comprehensive data set that you've ever seen in your life. We do a lot of data stuff here. We do a lot of number crunching because we're nerds. This is Danny Gould, everyone, with the Selling Silicon Valley Group, and I will catch all of you in the next video.